If you look at the data in venture, the most performant venture funds actually have higher loss ratios. In order to find those huge outlier outcomes, you have to go to outlier places. It was a state school kid with a poli-sci degree who worked in Congress. That's not going to carry you through months of like getting the kicked out of you, of like a pulled term sheet, of your biggest customer churning. You've got to be fighting demons with your goal of building this company.
Welcome to Venture Grounds. Why don't you give us a little bit of an introduction to yourself and tell us about Lerer Hippeau?
Yeah, sure. Jason, thanks for having me. I'm really excited to be here. I think the quick introduction on Will was I kind of got here on accident. And I know every VC is like, oh, I got an interesting path. And like they ended up like working at like a top tier consulting firm. And went to fancy school. I went to Ohio State and worked in Congress, and I grew up on a farm. Not in that order. It's been a roundabout journey that's gotten me here. So I grew up in Dayton, Ohio, went to Ohio State, and after college I spent 4.5 years working in Washington, D.C. For a congressman named Ro Khanna, who, as he would have it, represents Silicon Valley. And so working for him opened my eyes to venture and startups as like the most interesting way to move the economy forward. I was really interested in economics generally, and I read this report that in 2019, venture made up, over the previous 25 years, 0.1% of GDP, but resulted in 11% of new jobs created and 20% of GDP growth. And I'm like, this is the most interesting thing in the world. Is like, where can we put money behind incredible founders who are driving the country forward? So I threw everything away, went to business school, started a venture fund, raised like a little under $2 million in 2021, because it was a frothy market. The fund is doing well, top decile, but we really didn't know. I wanted to go somewhere that had been established and knew what they were doing. And Lerer Hippeau was exactly the type of firm to join when I joined in 2023. We've been around for 15 years. It's a team of veteran investors and entrepreneurs who've taken a lot of lumps, seen a lot of wins, understand that like a lot of venture is about learning the lessons that come before you. It's why everyone loves former founders. It's because when you...
Yeah. Second time, if you commit again, they're...
Exactly. And so I wanted to join a firm that was established. So Lerer Hippeau, we're on our 9th fund now. It's $200 million, just pre-seed and seed. We've been doing that for 15 years and totally generalists, just looking for great founders.
Yeah, I love it. That's great. Thank you. So you have a unique path into venture from Congress and business school. How has that background shaped the way that you invest today?
Yeah. I mean, I think it's really easy in venture to go for risk minimization and say, okay, find the person with the central casting team and the very obvious, big, large market, and de-risk yourself, particularly if you're earlier in your career and you're like, okay, I'm playing for markups. I'm not necessarily playing for... Exactly. And really, if you look at the data in venture, the most performant venture funds actually have higher loss ratios. They lose money on a percentage basis more often than the mediocre funds. Now, their wins perform much better. And I think in order to find those huge outlier outcomes, you have to go to outlier places. And so I'm not necessarily looking for founders that are out of central casting. I mean, I was not. I was a state school kid with a poli-sci degree who worked in Congress. So I think I like to take the same framework when looking for founders.
You look for founders with real earned insight. At the raw idea stage, how do you tell when an insight is real versus a rehearsed assumption?
The thing about insight is you got to understand how they got there. I think that's how you sort of separate the wheat from the chaff. It's not, oh, I saw this from the outside and it seems like it could be done better. Like, history is littered with the skeletons who thought things that could be done better without really understanding how they worked. And so I look for founders who have gone unreasonably deep. I have a good friend named Nikunj who works at another firm who he coined that term, so I'm not going to take it without attribution. But I want a founder who, whether they did it themselves, whether they were in the industry and took those lumps and felt those pains, or if they were on the outside. We have a founder we invested in who is building in the dental space, who he's never worked in dentist. He's a vertical SaaS guy. But when he decided that dental was going to be his thing, he went in and read full-on handbooks on like how to be a dentist and how dental offices run before he started his company. It's called 12. And that's what I look for in a founder who just has this like burning obsession that led to that earned insight. Not, oh, this seems like it could be done better. That's not enough in today's day and age.
Yeah, so like the founders who's just solving a problem to solve a problem that they see versus like you want like someone who's absolutely psycho obsessed.
Yeah, and the thing is like, oftentimes what I ask founders, particularly at the earliest stage, is like, there are lots of like problems that like seem worth solving. But the bigger question is like, why does the founder want to solve this? What is causing you? If you think it's like an interesting intellectual exercise to start a company, it is. But like that's not what's going to carry you through. That's not going to carry you through months of like getting the shit kicked out of you, of like a pulled term sheet, of your biggest customer churning because they decided to build something in house. Like you need to have something that's much more than intellectual interest and like this seems like a cool thing to do. It's got to be bigger than that. You've got to be fighting demons with your goal of building this company.
Mm-hmm. Love it. You like meeting founders at the Gmail account stage. What early behaviors tell you they will keep compounding as the company takes shape?
That's a good question. I think when you're assessing a founder just based on their characteristics alone, like there's a few things that I look for. And the first is, have they been performant? Like this is why a lot of VCs, I think, they lean on factors like fancy school or one of a few companies because someone else has vetted that this person is high performing. And you can find high performing people that went to Ohio State. You can find high performing people that worked at smaller companies you haven't heard about.
From middle of nowhere in Michigan.
Exactly. Like you like, but someone like generally you are what you do repeatedly. So if a person comes from a world where they've always done really well, like that is a great start. Like someone who like every reference says this person kicked ass, whatever they were doing, that's what I'm looking for. I also want to see someone who moves really fast. Like ultimately, like even if you're still at the earliest stages, like for a long time, that's gonna be your only advantage. Like you will be disadvantaged in every single respect with all of your customers, with all of your competitors, except for the pace at which you move. And so I look for early signals of that pace. And the other is depth. I just want someone who has like gone deep and like can speak. And I can tell that as deep as they've gone on their market, they'll also go that deep on hiring their key employees. So they'll also go that deep on understanding how to sell into this market. And those are all things that I can pick up on even before someone has like built a product necessarily.
Can we double down on pace? Like what are some of those early signals that you might like pick up on in screening someone or getting to know someone at the very early stage that you know they're going to move really fast or that they can execute extremely fast?
There's a founder one time who I asked why they made a certain decision when they were in the early stages of iterating, and he was like, because that was the fastest way to figure out if I was right or wrong. Like he didn't care about whether he was right or wrong. He didn't really care about the experiment that he was running. But all he cared about was that he wanted an answer quickly. Like, yes, there are certain performative things you can do that like do matter, like respond to emails fast and respond to emails late. But, like the real signal is like on when you're taking like deep, like hard work and you're like, how can I do this as fast as possible? Because I know that all I have is time. That's what gets me excited. But yeah, respond to emails quickly. It's not that hard.
101. You are not a thesis-driven investor. When you enter a new market without a strong theory, what helps you form conviction?
The first thing that I really look for is, I'm very network driven generally. You have to be network driven because I find the best founders through people who know them and share them with me. I can't pretend to cover the world on my own. I do the same thing when it comes to industries. So I built a strong network of people across industries who I can tap and lean on when I need help better understanding the space as I'm getting smart. You're always on your back foot from a thesis perspective if you are a reactive founder-driven investor, but we firmly believe, and I firmly believe, that it's about the founder themselves, and we can figure out the market as we go. I always think the most important thing is to understand the founder. Like, yes, you can find someone who has a great idea, but if they're the wrong founder, that's never going to work. Whereas a great founder with the wrong idea, that can still work. Yeah. Some of the great, I mean, it's like at this point like an uninteresting take. They're like the greatest companies in the world. Like so many of them were pivots. So it's really just looking for exceptional people. And oftentimes this is a tip for founders. Filtering for talent is really hard, which is back to why VCs look for these like silly external factors. But another thing is that most VCs have constructed 65% of their opinion of you before that first meeting. It's three things. It's the person who introduced me. I think very hard about who has told me that I need to meet this person. If there's someone who I highly respect, I'm so excited for that meeting. Then it's what have they said about you? If they said, you need to meet this person, they are the reason my company exists. Like they were my fourth hire. And like, I would like claw my own eyes out if they left, but like they're dead set on this, so I'll have to live. And then it's like, what do I know about you? Does your experience and understanding fit the story you're trying to tell? If you're someone who's like, yes, like I'm a long time like robotics person and now I'm building payment software, that's harder for me to grok. It doesn't mean it's impossible, but it just makes sure everything kind of flows together. What I describe to it is it's like the three things that determine 65% of a VC's opinion of you come from the intro email, and it's the sender, the text above the forward, and then the forwarded text is like your little blurb. Like that determines the majority of how that VC will feel coming out of the meeting.
I love that. That's great. You talked about AI plus cheaper hardware opening new opportunities. What kinds of companies became possible in that environment, and what do founders often underestimate? What is most interesting to you?
Yeah, I love cameras and sensors. It sounds weird. It sounds like surveillance statey.
I mean, I do too.
But in reality, like we're in this new world where it's a lot easier to process big amounts of data and information, and the hardware is cheaper. Means that if you can put cameras and sensors, this is what I'm looking for in an interesting company in this category. You basically everywhere, like every piece of surface area that something in hardware could exist is like real estate, and you have to like earn the right to sit on that person's real estate. And usually, like let's say it's a business. I'll talk about a company we've invested in called Augmoto. So in this case, Augmoto has built these cameras that live on name badges, kind of like sort of body cams for retail and grocery employees. And so in this case, the real estate is that name badge. And so Augmoto has earned the right to put their cameras on that badge because for the retailer, there's a huge problem of when things on the shelf are, mispriced, out of shelf, but in stock in the back, or otherwise mislabeled, they lose sales. It's big, short term, there's a pain, and like being able to capture this data of what's on the shelves with the cameras on the employees who are walking around picking e-commerce orders solves the pain. So now you've earned the right to be on that. Now in the medium term, you're capturing all this data for the brands themselves who also want to know how they look on the shelves. Hershey's employs 1,200 people whose job is simply to drive around the country.
Oh my God.
And just go to the end cap, make sure everything looks good, arrange it, set it up. And when in reality, you can say, Hershey's, I can tell you what the Albertsons in Buffalo looks like right now.
Right now.
And I can and so then you've earned medium-term value. And then the long term, you're capturing all this data of people doing things with their hands. All these like humanoid robotics companies are going to require reams of data that you can't just get by scraping the internet like you did with large language models. And so I'm looking for companies that, earn the right to put their sensor or camera there by delivering short-term value, and then are also able to capture interesting data that's really valuable in the medium and long term.
Yeah, I think I'm so excited. You're your Iron Sight cameras on hard hats Max for construction. Awesome. Love Max. Yeah, like I remember when I think it was like a year ago when he told me about that business. I was like, why does this not exist?
Yes, yeah. That's really
it's super, super exciting. What are you bearish on?
I am pretty bearish on pure play consumer application layers with AI. My biggest fear is that OpenAI is going to try and capture more and more and more of our mind share. They obviously have a very large valuation and a lot of metrics that they're going to need to live up to. And the one place OpenAI has won has been the consumer. And I think Gemini still is going to be a significant competitor to them. But regardless, it's going to be harder and harder for a point solution in the consumer AI space to succeed on its own, as I think the finite resources is attention. So I'm pretty scared of OpenAI when it comes to consumer applications.
Let's talk about geographies. Where are you, like, obviously we're in New York, San Francisco, Boston, there's action happening in LA. Like, where are other places that you're seeing great founders pop up that are starting incredible businesses? Obviously manufacturing stuff, Michigan, the Midwest, Ohio. Would love to just kind of, hear more on that.
Totally. Yeah, I think, in the current environment, AI in San Francisco are synonymous, and it's almost been like a retrenchment back towards like that core ecosystem. And when Lerer Hippeau started 15 years ago, the idea of New York being a venture ecosystem was highly contrarian. That's been proven. We were proven right. The Index, Sequoia, every major firm has real offices here. Tons of great founders are being built here. Yes, there are lots of great companies being built in SF. I'm not one of those people who's saying San Francisco will die. I went to Berkeley. Like, I lived in the Bay. Like, San Francisco is just fine. But there is just so much opportunity anytime you have domain knowledge and insight to be able to build applications and build products for those areas. So, for example, you talk about Detroit. There's a really interesting company called Knox that came out of the YC batch last year that's doing sheet metal and sort of disrupting the cartel of the sheet metal industry. And they're doing that out of Detroit because it's either that or you're dealing with like foreign suppliers, and as supply chains get disrupted.
Versus automotive right there.
Exactly. And you have all this, like, as the American dynamism thesis gets a little more exciting. A lot of these companies require real estate. You can't build that in New York City. It's harder to build that in San Francisco. You've got tons of warehouses.
Tons of open land.
In El Segundo, in Detroit, in Austin, Texas. And so that's where you're seeing a lot of interesting companies get built. I generally believe that, yes, San Francisco has been the place to build an AI company, certainly an AI infrastructure company over the last 4 years. But I think that there will be a wave 2 of application layer companies in the AI space in the next 5 to 8 years, and it's not going to matter where you build them, because it will no longer be about having like the best technical talent. It's going to be about understanding what's happening technically, but it's be more about embedding within the user in the application. So, as an Ohio person, I'd love to do a deal in Ohio.
I love it. What's one view you hold about the market that most investors would disagree with?
I'm probably gonna get in trouble with this, but I probably previewed this take talking about my Berkeley experience. I think Stanford is the least interesting place for someone to go and build a company.
Can we double down on that?
Yeah, I think it's just like totally going to get me in big trouble with I'm sure any number of folks. But the thing about Stanford is that Peter Thiel says that the best founders spike on being highly contrarian and highly like focused or something. And I think about Stanford in 2008 when Sam Altman dropped out to join Y Combinator. Incredibly contrarian move. Y Combinator was not a thing. Stanford was a place where really smart people went to go maybe work at large tech companies, or they'd go to McKinsey, or they'd go to Goldman Sachs. And so to spurn that path and start a company was evidentiary of who Sam Altman was and who he would become. If you go to Stanford in 2025, you are following a path that is just as well worn as a 2008 Stanford graduate's path to McKinsey. And I'm not saying that. And so I do not think it takes any bit of gumption or contrarianism to go to Stanford and start a company. I'm looking for people who like turn down, who are really rejecting the norm. People who are like skipping college entirely because they've worked on some like weird crypto project and made like too much money when they were 18, and now they're trying to build something.
Yeah, now they're curious about starting a business. They don't want to go the normal path. Like, why school?
Exactly. So I think the next Sam Altman probably isn't in college. It's 18 right now.
I mean, yeah, exactly. Like, and now there's so many like founders in residence programs that people are doing. The accelerators or like these upstarts that are on college campuses, and people are dropping out probably faster than ever.
Totally. And this is not to say I still think higher education is important. Like, I'm not like that radical, but I do think that generally, if you're looking for people who are contrarian, who will really spike on zigging where the rest of the world is zagging, where you find the true outlier outcomes, it's not Stanford.
Now there's platform for people to do that. Exactly. It's not as risky because you can always go back to school.
Exactly.
They're always going to take your money and take you back.
Exactly. Go Bears.
What's one conviction you've completely rethought in the past year?
If you would ask me a year and a half ago about voice as a modality, I would have said, no, people are never going to use voice. That's it's intrusive to daily life. It's someone who abhors receiving voice notes. It's highly inefficient to receive. But as AI has improved, and I've used some products, I'm a Whisper Flow user right now, it really is the future. Like, people are bad writers. And so if you can get information out of people that doesn't require them to write, you will get so much more robust information. And it's particularly useful for prompting. As prompting becomes more and more, and natural language interfaces become more and more the norm for consumers and businesses and everyone else, voice makes so much sense. It's just like, I can convey so much more in more words, but in less time through voice than I can through typing. And I'm not saying like voice to text is perfect, because like I think people need the time to compose their thoughts, and like the recursive nature of typing is good for something like that. But for dealing with an AI, voice is magical.
Love it. What's the risk most of venture is sleepwalking past right now?
So this is not a hot take in that the pre-seed and seed market is overheated. That's the most obvious thing of all time. But the reason that it's bad for founders is not founders are raising too much money at too high valuations and it makes it harder to grow into it. Like, that's all true. But the real danger to a hot pre-seed and seed market is that for every seed or Series A company who is trying to hire right now, there's a whole cohort of incredible third, fourth, fifth hires who are actually now credible enough to raise a pre-seed round. And so you have that whole clear market, like founding engineers. This isn't my take. I saw this on Twitter last year. They said every year Y Combinator takes 200 quality founding engineers off the market. And I truly believe that it is a lot harder to hire right now because there are tons of people who would have otherwise been employees in different markets who now raise $3 million rounds. And so I think that's the biggest fear is that like we're just stretching the talent market too thin. And that's what fucked us in 2021. It was a lot of things. It was overvaluation, but it was also that talent declined when the hiring markets get really competitive, and it is so competitive.
For that first founding engineer. What's some advice you'd give to a founder that is, maybe just raised a pre-seed and is trying to hire those first couple people in such a competitive market?
I'd say you've got to figure out new ways to convince people. You're no longer going to sell someone on the vision of AI and like you being like the next big thing. Like you've got to sell this person on impact. I think it's Vinod Khosla talking about Sun Microsystems. Give away more of your company than you are comfortable with. Like this is like in a competitive market, like you're not going to be able to up the cash comp against OpenAI or whatever. But if you have to tell someone like you're a function, like expand like the definition of like a founding person. You're already seeing that. Like I have a friend who joined a company and she was probably like hired 25 and she's founding title. Like I think. And I have no idea if the equity reflects that, but I do think you should get more comfortable with giving away more of your company to early employees in a competitive market like this.
Yeah, that's great. That's great advice. Who's a founder or a company you're fascinated by, and why?
It's a company called Hallow. It's raised through I think like Series C. It's over, I think last I heard, over $100 million in annual revenue, and it's a Catholic prayer app. Oh. And I've had this thesis for a while. I wrote a blog about it, over a year ago. That I just think religion,
huge market. I know someone else building in this space. It just came out of Speedrun too, and they're like cranking.
The Creed guys.
Yes, love them.
Exactly. I think that there's two ways to think about religion, and I'm just like obsessed with it. The first is like the massive, 60% of the U.S. is Christian. Like it might seem like that living in New York City, like no one I know is religious. Like we're in a bubble. Most people are religious in the U.S. And so market's massive already. And I also think that there is like sort of an interesting trend where you're seeing younger people are more religious. Like the drop in religiosity has totally stopped and is now rebounding a bit in Western culture. And you have this massive existing base of users. But then I also think that there is this whole like market. If you're not necessarily comfortable with building something for like hardcore like Bible thumping or whatever religion is of your choice, there's a whole world out there for people who are yearning for the wraparound benefits of religion, the community, so the in-person ritual every single day. It's the identity, the thing that I can like see as Midwesterners. I see and I feel a kinship towards you in the same way. It's like 100%. Like, we're both Lutherans.
Those are my people.
Yeah, exactly. Yeah. It's the exact same thing, and it's the spiritual guidance. And I think you've seen a lot of things over the last 70 years of secularization that has now reached its apex that have popped up to fill the gap. Soul Cycle.
Of course.
So Soul Cycle is the same people in person every day. You've got your priest up front, sort of preaching to the group. You've got the identity of soul, but there's no spirituality involved. And you've got I think another one is like politics. Like the identity. It's like I'm a Democrat, I'm a Republican, and it has the values too. People proselytize. People knock doors for their political candidate in the same way they knock doors to like convert people on a mission. But it lacks that sort of ritualistic component because elections are only every 2 or 4 years. I think if you can build a company, it doesn't necessarily have to be a Catholic company or a Muslim company or a Jewish company. You can build a company on anything, but if you imbue the principles of this being, as a consumer company, being a user of this company comes with an identity. It comes with like moral guidance and values that you can share with others and you feel proud of sharing, and it comes with like an in-person ritualistic component. There's a huge playbook to be built there on building massive companies.
Yeah. So you're exploring that. You're looking for things in consumer right now. You're very interested in that space.
Is anything like in the consumer world that like sort of hits on those 3 pillars of religion, whether it's religious or not, really interested in.
Love it. That's great. Awesome. Well, thanks, man. This is great.
Jason, thanks, man.